The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your trading week right here, and we kick things off in negative territory. Quite the volatility on Friday. On a hot jobs number, we have yields rising yet again today. The 2 and the 10 almost next to each other, both of them just above 4%. The 10-year yield back above 4%. You know what? We're going to take a look at the 10-year and the 2-year to kick things off. We rarely do, but the trend is intact. You look at the move on Friday, you look at the move overnight from the Sunday night open in futures, and we have lower price, we have higher yield. You got the 10-year at 4.03%. Okay, you jump over to the 2-year right now. Just want to make sure. Yeah, they almost look like identical charts. I was just making sure that I refreshed the chart correctly. Nonetheless, you got the 2-year trading lower as well, and you take a look at those yield curves right now. The 2-year exactly on 4%, up 7 basis points. The 1-year is up 9 basis points this morning, okay? The short end of the curve, not pricing in as many Fed cuts as we may have thought even just a week ago, and then you take a look at the 10-year, and we're approaching about 4.02% right now. So you got the 10-year up 4 basis points, but yeah, take a look at the 2-year, and as we're talking, we're oscillating. We're back under 4%, but both of them right near that 4% marker, and that's going to shape a lot of the action we get so far this morning. So back to the markets. S&Ps. You see the open overnight. We opened at all-time highs almost, up above 5,800. Yet again, you trade lower in the overnight session to the tune of, look where we were. At 6 o'clock last night, we opened 5807 is where we were. You make it all the way down to 5767. You're talking about 40 points to the downside. Nonetheless, you got the S&Ps off about 1/3%. NASDAQ 100, we're off by about 0.5%. You see the volatility on Friday. We spike higher on the jobs number. You give it back, and then you trade higher throughout the session on Friday. You test those lows at about 5 a.m. this morning. NASDAQ 100, negative by 88 points. Dow off by 137 right now, and you got the Russell off by 5. Bitcoin up by about $500, trading at 63,160. Crude in focus, quite a pop from where we were last Tuesday, 66.33. You trade up more than $10 from where we just were, 76.47. We're trading at 75.45, up more than $1 right now on crude. We talked about yields. What do we have going on? You have lower price, higher yield, the 10-year at about 4%. You jump over to the dollar index this morning, and pretty sustained action. You got that initial, just huge acceleration in the dollar. On the strong jobs number on Friday, we spike at 102.68, and we've just been chopping around at that level. No huge reaction in the dollar, especially considering with what's happening in other areas. And yeah, you take a look at the gold with some volatility as well. Gold kind of testing the lows of Friday morning, down there at 26.60. You see the slide from where we were at about 8 a.m. this morning, and you got gold right now down by $4 on the session. We jump over to the VIX for volatility premium. Pay attention to this VIX, man. How about it? 21. This market's near all-time highs, folks. Okay? Backing it up to the S&Ps again. Putting the S&Ps on a daily. There should be very little risk premium in this market when all we do is trade it higher, it seems. Right? You talk about getting handsomely rewarded for buying the dip. Boy, if you were buying the dip on August 5th, you were buying it anywhere from 5,300 to 5,200 to a low on August 5th of 5,120. We're trading at 5,800, folks, let alone if you bought the dip back on September 6th. You had 5,400. We've almost gained 400 points from where you were then. Now, but check out the chart of the VIX. Right? Look at the VIX. We are getting to elevated levels that we were approaching, and that's why I went through the actions of showing you what the S&P looked like. Okay? Now, the August 5th spike was bananas, man, right? The unwinding of the yen, the dollar, the yen carry trade. But just look at where we were, again, when the S&Ps were diving down to a low on this acceleration, right? We traded in the span of 4 trading days from 56.69 down to 53.94. It's what, 275 points almost. You had a 5% pullback in the S&P from September 3rd down to September 6th. And meanwhile, at that time, we had the VIX over that period of time spike from about 15 up to 23. And meanwhile, the S&Ps have rallied dramatically. You saw the VIX pull back, but pay attention to what's happened since September 27th, man. Look at this. September 26th, the VIX was at 15. We're pushing 21 right now. September 26th, folks, the VIX was at 15. Okay? For some context here, there's September 26th. Kind of right where we are right now, right? Look at this bar that we're in. So the VIX has gone from this bar here, September 26th, at 15, and we're now sitting at 21. Pay attention to people paying more for insurance, man. They are paying more for insurance. The VIX accelerating to 21 at a time when we've just kind of been topping out a bit. But boy, we got volatility everywhere in this market, and it is pretty remarkable when you look at yields in terms of where we're going, the expectations for this Fed, and how quickly things have pulled back. I mean, we were talking about it on this show, right? The Fed Watch tool, just how remarkable the amount of cuts were priced into this market, especially going forward over the next 6 or 9 months. And yes, things have changed dramatically, to put it lightly. So, where are we right now on the yield curve in terms of what the market is expecting? Well, the market now, this is how quickly things have changed, folks, okay? You go back a week ago to September 30th, and the market was thinking there was almost a 1 out of 3 chance that the Fed was going to cut by 50 basis points again on their November 7th meeting 1 month from today. Okay, 1 week ago, September 30th, the market was pricing in about a 2-to-1 chance that the Fed cuts 25 basis points versus cutting 50 basis points. Fast forward to today, and there's now almost a 20% chance that they do not cut. Right? Just mammoth moves on the yield curve. 83% chance right now that the Fed is going to cut by 25 basis points on the next meeting, and actually almost a 20% chance that they do nothing at all, as opposed to when the market was looking for potentially back-to-back 50 cuts. Pretty remarkable. Now, we've been looking at the June meeting as well, right? Now, what's so crazy is the June meeting, we had been highlighting the 3 to 3.25% range was the highest probability on that chart. Look where we are now. We've had 50 to 75 basis points of cuts priced out of this market within the last week through June. Over the next 6 meetings, 75 basis points has been sucked out of this market. We'll take a look at it, man, but it is a remarkable move, to put it lightly, and we're going to get some action today. And the best part as a trader, folks, is it's not ending anytime soon, because this is going to persist to play out. There are still a lot of cuts priced into this market. We got the 10-year at a very affordable 4% right now. When you think about the growth in this economy, right, the AI growth, productivity gains from AI, stock market prices across the board continuing to make new all-time highs, and meanwhile, we have a 10-year sitting at 4%. Seems like the cost of capital lines up pretty well accordingly. All right, we check back in on that dollar index coming into the first break. Dollar pairing those gains a bit. We're at 102.41. Quite the spike on Friday. Stay tuned, folks. It's Monday trading. We got a lot to talk about. We'll be right back after the break. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the markets clawing back some of that pre-market rally to lower prices. You got the S&Ps off by just 20 points right now, trading at 57.80. We jump around to some of the movers of the morning, and Pfizer getting a little bit of a lift. So Starboard, activist investor with roughly a $1 billion stake in the company, seeking to mount a turnaround, is the report out there. They believe Pfizer's leadership has deviated from what was historically disciplined cost structure and investment in novel drugs, according to people. And nonetheless, you got Starboard in there. You got Pfizer jumping from 28.60 to about 29.60. We take a look longer term on this chart, and yeah, it's been quite a slide, man. Now, so many of these health companies, right, accelerated higher during COVID, but you look at a company like Pfizer. I mean, come on, right? How is this the case? From 1998 over a period of 26 years, you're break even on a company like Pfizer. Pretty remarkable. So not too surprising. It has been quite a slide, cut in half from that spike high with the market up to $61. And then the slide really began beginning at 23. But nonetheless, you got a little bit of a pop today for Pfizer shares. You're up by $1. That's going to be a good 3% pop at the open. Yeah, and how about this one? Interesting stuff. So you got Joker 2, basically. The movie was out, and man, the reviews are a little harsh, and it is a bummer because that movie with Joaquin Phoenix, the first one, just like amazing on multiple levels, and it just got 40 million in the domestic ticket sales, a far cry from the almost 100 million that it brought in during the debut in 2019. Things have changed since the Joker released in movie theaters in 2019, but just last month they were looking for around 70 million. But as reviews poured in, the estimated figure slumped to around 50 million, and now they come in at 40 million, right? Yeah. Now, you look at some of those reviews. I had been looking them up myself this weekend. I started seeing this coming out this weekend in terms of some of the conversations. They knew it was happening. IMDb, 5.3 out of 10. I mean, I'll see this movie for sure. The first one was so good. 5.3 out of 10. Right? And he's such a good actor, man, Joaquin Phoenix. So I'm not sure what's going on with this movie. But, and then you go over to Rotten Tomatoes. It's just a bummer. And the reason I'm going to tell you, it's going to, I don't even, popcorn meter, I don't even know what these mean, man. Tomato meter, 33%. Not good, okay? No matter what it is, unfortunately, out there. But what they did is that they actually declined to do a test screening, and this is where a little bit of, it's a gamble, okay? So the word coming to mind was maybe arrogance or something like that, but it's a gamble. If it pays off, it's not arrogance, right? No test screenings. It's number 2 of a marquee franchise, but they didn't do a single test screening, and now nobody likes the movie, and they spent $200 million plus for it, right? Crazy. Yeah, the original one grossed over $1 billion and was the highest grossing R-rated film until Deadpool and Wolverine just came out, and this one's not even going to be close. They had a budget of $200 million. They didn't do a single test screening. Versus the first one that was only $55 million. You talk about gambles, man. People talk about trading, right? And gambling, right? So much in business is a gamble. This is the best description of it all. First film, they put up $55 million. They bank $1 billion. Second film, they decided to up the leverage. They put up $200 million. So they have a problem there. And that's just unfortunate because I wanted to see that movie and was looking forward to it, man. Because the first one, as I said, was just amazing. Yeah. And they even talk about in this, the test screenings. 'Cause I was reading about this. I started seeing it. There were memes out there talking about no test screenings whatsoever, and now the movie's going to be an absolute tank, which is really unfortunate. Test screenings are not the holy grail. The Flash, they were incredibly positive, but yeah, that film tanked. But since they declined test screenings for Joker 2, they're at the mercy of the critics and audience word of mouth, which is so far disastrous results. Yeah, it's a bummer. But nonetheless, yeah, for what it's worth. But they got some problems, man. $40 million. Director Todd Phillips' first Joker tallied $1.07 billion, man. And now they come in, they up the ante, and yeah, they go over those reviews that I was just talking about. Some tough numbers, to put it lightly. All right, what else we got going on? Let's jump around to some of the big dogs here at Apple. Trading lower today, driving this market. Getting a little bit of a pop, but they get a downgrade. Jefferies downgraded that megatech company to hold from a buy, saying near-term expectations for the 16 and 17 are too high after the weaker than expected initial demand. The AI capabilities leading to an accelerated smartphone replacement cycle premature. We've been talking about on this program. All right, I'm in that ballpark, man. I got my phone right here. If you can see it, my case is broken. I need a new phone. I don't need, right? Need versus want. I want a new phone. Don't need one. I could get a new case. I need a new screen protector. The battery's struggling a little bit. I have a 12 Plus. I met my dad this weekend. He had an open house going on St. Pete. He's got the USB-C converter. I still got the old Apple one because I'm on the 12. Nonetheless, I'm about at a perfect point where I'm on a 12. I use it so much for work. I take pictures to the nth degree, and I'm in no rush at all. And I was so gung-ho for this update, saying, okay, I've held off for 4 years. It's probably a good time. It's going to be a super cycle upgrade. There's going to be capabilities that really define the difference. And I have no accelerated impetus to get a new phone. There's no motivation whatsoever right now. I haven't heard anybody talk about anything cool. Now, these phones are just coming out. I get it. But pay attention to yourself sometimes. I talked about this before, right? Amazon. Now, I own some Amazon. They're a great company. But I kicked myself that I didn't buy Amazon the moment I signed up for Amazon Prime. I was one of the early adopters, man. I was down here, somewhere back here. 2006 maybe, 2007, 2008. I couldn't believe that Amazon was offering a product. At that time, it was probably like $79 a month or something for free shipping throughout the year. Pay attention to yourself sometimes, right? Apple, yes, they're going to have plenty of upgrades, folks. But Apple, okay, they need more upgrades than we're talking about when you're talking about a company right now that is valued at $3.4 trillion. Okay, they really need a driver, and I don't think this one's going to be the driver. And it's really discouraging to see Jeffries talking about that the expectations for the 16 and the 17 are too high. Because I'm saying to myself, and this is where it's a worry, I'm saying, okay, you know what? The 16's not getting me excited yet. You know how this goes. Time flies. Maybe I'll wait for the 17. Maybe it's going to be the 18 that really changes the world, that we really have the software and the AI capabilities. But nonetheless, so you got Apple driving this market a little bit lower. They are lower as well. And then you got Amazon. Speaking of, they get a downgrade as well. AMZN, they're down about $3 to kick things off. You closed out at 160.86 on Friday. There's your 5-minute chart. So be careful out here, right? We got markets higher, but you got the VIX spiking. We got Apple getting a downgrade. Okay, you have Amazon getting a downgrade from Wells Fargo to equal weight from overweight, sliding growth and competition from who? Walmart. We'll talk some Walmart when we get back. Stay tuned, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got stock market open on Monday morning for trading, and you got market getting a little bit of a lift right now. S&Ps. I say a lift as in off of the lows that we were at 5:30 this morning. About you're trading right now off 17 points right now at 57.83, but we are more than about 20 points off the low. NASDAQ 100, as I just talked about, right? Apple and Amazon getting downgrades for different reasons. Apple, Jeffries talking about the super cycle, might not be here for 16 and not even for 17 in terms of expectations for this equity. And then Wells Fargo downgrading Amazon. They're worried about the competition coming from Walmart. Walmart shares down about 0.1%. I will say, folks, a nice little hedge if you do have Amazon is to have a little Walmart, because they are the competitors, man, and Walmart is doing an outstanding job. I had been talking about for the longest time, like, let's go back, right, to during COVID, okay? You come into COVID, jeez, I got to go back so far now. Oh my goodness, it's back here. I'm trying to find COVID on this chart in April of 2022 instinctually, thinking that the slide to negative prices, no, that's the rate cuts. Here is prior to COVID. You've doubled in share price on Walmart shares prior to COVID. Now you had Walmart trade lower, down to a low of $34 during COVID. You spiked to highs, but what was going on during that period of time, I remember talking about in this program, man. So we belong to Sam's, I belong to Sam's, which is Walmart, okay? And I was ordering certain things from Amazon, of course, certain things from Walmart. The one where it really came to the forefront, okay, is the Tommy's Born, February of 2021. Here's where you are on the chart. And look at the consolidation this thing was in, okay? And I remember saying, so I would order, for example, right, from Sam's. This is the transition that has taken place in Walmart, because it is real. I would order diapers, wipes, and maybe some large bags of Smart Food popcorn, okay? I would order those from Sam's. So imagine, huge things of diapers, right? Huge things of wipes. Those things of wipes probably weigh 30 pounds themselves. And then a huge bag of Smart Food popcorn or two. And they would ship it all to the house in one giant cardboard box that looks like the cardboard box had been used for 20 years. It was taped up by, it looked like 12-year-old interns on their summer break, okay? And when you opened it, the Smart Food popcorn had been destroyed by everything else moving around in the cardboard box, and there was Smart Food popcorn all over the inside of the box, okay? That's what was going on in 2021 when you were ordering goods from Sam's and to a certain degree Walmart. Things were weird. The other thing that happened from Sam's, I ordered paper plates. Okay, I ordered so imagine it's those huge stacks of paper plates, right? They're in a big clear plastic bag. You buy them, there's probably 250 in them, something like that. They literally, folks, show up on my front door, not in a package, just in the plastic bag, sitting on the front door. The plastic bag is ripped, it's black. The paper plates in there are covered in black, right? I think what happened was that paper bag, that item probably rolled out of the box that I told you about, and then it was probably just getting knocked around in the truck, and then they literally just sat it in front of our door, knowing that they figured out who could have been this item. They looked up the items, they probably figured out it was ours, and they just, I mean, what a joke. Amazon would never, I was flabbergasted, right? Point being, long story, that doesn't happen anymore. Not even close. I order things all the time. They've gotten it together. They've spent the capital that they needed to work on that. And you've seen the stock rewarded as you've traded from 40 up to 80, and they are a big competitor. And I don't have that feeling anymore. Okay? So you really want to pay attention to subtle things like that. That was a huge problem Walmart was dealing with. They were trying to plow the capital into it. That's why their stock was struggling, because they really were going to have to spend some money. And they've done it to a certain degree. Yeah, so not surprising, because, you know, I now find myself, at least I go to Sam's, I go to Walmart.com, I go to Amazon, I regularly shop at Sam's. We don't have Costco around here, but nonetheless, you get the point, so we will see. Okay, now, what else we got going on? Boy, it just doesn't stop on this one, man. So, we got a storm bearing down again on the Tampa Bay and Florida regions. And this one looks pretty intense, especially where we are in the middle of the state, man. We'll see where we go. The storm is right now in the Gulf. So we got a couple days, but it's supposed to hit basically Wednesday night on the West Coast. The cone is about as big as you can get, but Tampa right in the middle of it, man. And yeah, if you're in this one, be careful, folks. Okay, especially anywhere there. These poor people on the Barrier Islands, man, they're just beginning to rebuild or even think about it. And this thing is bearing down, and this one looks rough. You don't get a lot of storms that rip across the Gulf straight going from west to east. And it's October 7th. I know in the Northeast it probably might not make sense, but I tell you, folks, it feels like it's about 100 degrees out some days in Florida still. The heat is still remarkable. The water temperatures are still remarkable around here. It still feels like summer. It takes about until, and we're in South Florida, okay? We're not quite in Miami, but it takes about until Halloween till you really get a reprieve of the weather down here. Even sometimes during Halloween, which is as close as you can get till November, right? Even in Halloween, it's pretty hot some of those nights, depending on the day, the years as they go. I know now because this is Tommy, going out with the kids. But yeah, Hurricane Milton, now a Category 3 storm on track to batter Florida. So if you're in this path, really pay attention, folks. We got a lot of listeners in Florida, of course. We got a lot of viewers, and it's still pretty far out there, okay? But yeah, you look at where we're talking about. Where did I just pull this up? Did I have it? Yeah, this one. And there's the cone, right? And you're talking about some sustained winds. You're talking about hurricanes. It might roll into Tampa as a 3 or a 4. And, of course, the storm surge is a dicey one, for lack of a better term. Just really make sure you're protected. Those low-lying areas, flood zones, this is a real one. So keep your eye on it. And we'll update you as the week goes forward. But I imagine at this case, we will see when we are open, because I imagine that Wednesday or Thursday, they already closed Pinellas schools. I think they're already closed today. Polk County schools, where I am, middle of the state, Lakeland, they're closing Tuesday, Wednesday, and Thursday. As of now, Friday up in the air. They do have days going on today, but they've even closed the nighttime activities. A lot of the schools become shelters around here. So even though it's not going to be dire tomorrow necessarily, they got to get ready for shelter. So schools are going to be shut down. So you see how the impact, right? The jobs number, to bring it back to the market, man, this is going to, it's not going to be across the southeast like Helene was. But in terms of Florida, you see the impact these storms can have when we're almost going to be shut down for the week, right? You got parents with kids in Pinellas County. They're not in school today already. Tuesday, Wednesday, Thursday, Polk County. Kids aren't going to be in school all week. That's going to weigh on some of those numbers, of course, as we go forward. But stay safe out there. And then bringing things back to Florida. So interesting in terms of this article. This is an article out there from the Journal, okay? This morning. I was reading it earlier this morning. Just talking about the Florida migration coming undone. I wouldn't put it as bluntly, but yes, there's some winds, all right? We have the wind at our backs, folks. There's still going to be volatility, okay? But in Florida, yeah, we get the wind at our backs in terms of migration, people coming to Florida, cost of living, taxes. All of that is still intact, just not to the same degree that it once was. They have anecdotal evidence in here, but what I will say is these storms are mattering. And they are going to reshape at least that area of the coast that is struggling so dearly, like the Barrier Islands, and we will see. Stay tuned, folks. We'll be back. We'll talk some equities. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We'll get the S&Ps off by 18 right now. Market's slightly in the red right now. You check out commodities. We've got crude up $1.30, trading at 75.69. You got gold off $1 at 26.66. And we were talking about that mortgage conversation, right? And talking about Florida. What is interesting is you take a look at a conversation like this. I'm biased. I live in Florida. So, I don't think it's to this degree. The migration is coming undone. Listen, all news organizations, even good ones like the Journal, they're looking for clicks, man. They're looking for readers, okay, and they want to have a tantalizing headline. It's not where it once was. You have home prices have doubled from where they were prior to COVID basically to where they are right now, okay? Doubling between 2017 and 2024. Home prices in most of the state have been flat since March of 2023. Folks, not surprising. Could you see a pullback? Yes, of course you could, okay? But you double in price from 2017 to 2024. We got mortgage rates at 6.5%, and you're sitting near the highs right now. For context. Now, the other part about this, they bring up some anecdotal evidence of people coming into the market, right, buying, etc. Anthony Holmes, all right? He was part of it. In 2021, he moved from Virginia to a gated suburban community in Tampa. He bought $550,000 5-bedroom home, spent another $50K on solar. When he had to move back to Virginia for work, he expected to sell the house quickly, but he lists it and he's had some trouble. Here's where my brain goes, okay? Did you just say that this guy got a $550,000 home and probably put a mortgage on it in the year 2021? Do you know what mortgage rates were at in 2021? Do you know what this guy locked in for a loan in the year 2021, probably for a 30-year period if he knew what he was doing? The average rate, I had to look it up. I didn't have to look it up to a certain degree because I pulled up this chart, and I know that the 10-year was right near lows. I mean, your lows were in 2020. Okay, higher price, lower yield. But boy, we had some relative lower yields when you still had the 10-year up there trading at almost 136. 135.14 was the high in August. The average rate for a mortgage in 2021 was 2.96%, with a record low of 2.65% if you locked it in January. 15-year fixed-rate home loans, the average rate in July 2021 was 2.1%. Right? Never sell that house, especially if you're in an area like a gated community in Tampa. Now listen, you're in a flood zone, okay? Where is that gated community? You on Davis Island or something like that? I get it. I don't think that's the case, though, what they're talking about. But I just want to add a little bit of light. Maybe it's in a biased fashion living in Florida, okay? But they talk about guy buys the house, $550K, puts $50K in for improvements and solar. He's been trying to list it. In February, he dropped the price 5 times. Well, that's a problem right off the bat. Who's pricing your product if you're dropping it 5 times, folks? Okay, we'll get my dad in there. Let me tell you about what he thinks about it. You put a product up, and all you see in the listing is that they keep bringing the price down. Okay, not what you want to be doing on the front end of that. In 8 months, 0 offers. Okay, no one even showed up at the open houses. Nobody. Well, you don't know exactly what's going on in this one. You don't know what he paid for that property too. But keep in mind the mortgage he has that he's thinking about giving up. They don't even talk about that aspect of things, which is bonkers. Because from a financial aspect, right, what can he rent that home out for? All right, now listen, maybe he needs his down payment back, he needs that, etc. But it is pretty remarkable. You have a conversation like this talking about real estate. You're talking about people who are fortunate to buy a property in 2021 with a 30-year mortgage, okay, valued at probably a mortgage rate under 3%, and they're only highlighting that it stayed at that price level during that time. But what is going to be real is going to be the coast, because I can tell you, even being in Florida, you know, I'm hoping, I'm praying, man, that this one is easy on us all in this state. It's probably going to hit somewhere, and yeah, it's a real threat, man. You know, we don't have very many of these types of storms that rip across the Gulf in that manner, and it's just happening so often now that when it comes to flood zones, etc., right? My dad had an open house on Saturday in St. Pete, beautiful home. People were showing up from the area. One couple, probably 30, 35 years old, showed up, St. Pete. They live in the area. Where they live is in a flood zone. The house my dad was showing, I think it's 56 feet of elevation, so a great area of St. Pete. If you're in the market, give them a call. But you had people already, right? This was on Saturday, coming in on the heels of Helene, saying, man, we were lucky. This couple, they were in a flood zone. They're right near the end of the flood zone, and the flood stopped almost 2 feet from their house. And guess what? They're looking to get out, because that was just even too much. They got very fortunate. Why risk it again? Hopefully this time it's okay. But it's a noticeable difference how often it's occurring. And then you go to the next step, right? You can be on that coast if, what do you have? Well, your house is either built for it, or you're just prepared for the inevitable, unfortunately. Whether you can handle the insurance costs, however that works, you can handle the rebuild that's probably coming down the line over the next 10 or 20 years if you keep that property, and you're willing to make that, you know, assessment, that bet, that trade-off to a certain degree. But in many aspects, be careful on those properties, because I would say that a lot of people are going to say, you know what, I'm going to give myself some elevation, I'm going to be by the water, but I'm no longer going to be in those evacuation A zones, those flood zones, etc. Insurance is always a problem, etc. And yeah, and look at, as I'm talking about this, okay, the Journal is popping up that it's now a Cat 4. It's October 7th, folks. Now listen, this is still hurricane season. They roll in. But yeah, it's a big one that's rolling in, and it's a Hurricane 4, and it's probably going to roll in Tuesday night. Whew. Had winds at about 150 miles an hour, and we are now 700 miles southwest. And that's the thing. The trajectory can change a lot at this point. But boy, it's going to hit somewhere, and this is going to be a big one. Too early to know the path, okay? But the core of the storm could make landfall anywhere from north of Tampa Bay through the Tampa, St. Pete region, down to Sarasota, Port Charlotte, Fort Myers. I mean, the whole state's on alarm right now. They should be, rightfully so. But yeah, when you go back to that article, you know, the mortgage rates, the real estate in terms of what people are talking about, and supposedly the Great Migration, that's not happening, folks, okay? There's not some dire warning here in terms of what's going on. Yes, maybe it got a little bit ahead of itself. We've doubled in prices from 2017 to 2014. But I tell you, folks, what did happen, okay, I've been talking about my insurance, and I'll give you the story that happened with my insurance in this market, all right? I had insurance that was probably, you know, when I bought the property, a duplex in South Tampa, 2014, somewhere there, what was it, like $1,200, $2,000. It inched its way up to probably $2,700 for insurance, and then boom, 2 years ago, I got a bill for like $9,000 from the private company I was with. So my goodness, I pursued Citizens. Citizens got me back down to like $1,800 from $9,000, but that's when we had a real problem. Well, what just happened? What just happened is I just came up for renewal again. I went out to the private market. The private market undercut Citizens this time. The private market had a private insurer that was back down to like $1,700 or something like that for insurance. Real insurance, no cutting corners. All right, so there are changes being made to that as well. I don't understand the fundamentals well enough, unfortunately. But yeah, no longer on Citizens, which was the case for a majority. All right, folks, we got markets. S&P's off 20. One more segment. Don't go away. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets sliding a bit. You got the dollar yen right now. How about that move in the Friday session overnight? We hit 149.12. We've backed off a bit to about 148, but you take a look at this rebound. What is interesting is if you're talking about dollar yen, okay, you're right back to almost the 382. So this 149 area, this 150 area, critical area to see if the yen can hold there. That also correlates to where you were in February, right? And that correlates to also where you were in August. So we're bumping up against a little bit of an area right now in that dollar yen, but we got more driving the dollar than just the yen, man. We're sitting at 102.44, quite a bounce on a recoil of yields going on, and you jump over to that 10-year. We're sitting down 9 ticks right now at 112.19, we will call it. And we take a look at, where's our yield curve? There it is. We're talking about a 10-year right now, 4.01, and the 2-year at about 3.98 as those two merging a bit. And yeah, back to that conversation talking about supply, demand, some of these homes. I mean, supply is rising, right? It's not surprising. We'll see what happens as they begin to cut rates, but not as many cuts as the market expected. That's going to shape, of course, the real estate market as well. But yeah, just remember that conversation. I think that the Journal, everybody has their biases, right? That article was talking about the Great Migration is coming undone. They should have pointed out that this gentleman bought a home in 2021 and probably locked in a mortgage at under 3%. And for some reason in the next 2 years, he needs to sell that property and he's going to give up that mortgage, which is probably a mistake when you have what? And if you didn't lock in a 30-year mortgage at that time, that was a mistake. He said, how do you know he has a 30-year mortgage? Well, he should have a 30-year mortgage because he was buying a home in 2021 at a time when mortgage rates were under 3%. And it's only 2024, and he could have 27 years left of a loan that he's only paying less than 3% on right now at a time when you got the 10-year yielding 4%, right, etc., as it goes. All right, folks, stay tuned. It's going to be an interesting Monday in the markets, and we'll be back tomorrow as well. We'll keep you updated on that storm, but we got our man Basil Chapman. He's coming up next, folks, for the Tiger Technicians Hour. Check out the opening call. I was reading Basil's opening call this morning, man. Outstanding report as usual, Basil. I appreciate it. Yeah, we'll keep our eye on that storm. Have a great Monday, everybody. We'll see you tomorrow. Thanks, folks.